What up, Hyperchange? Welcome to HyperChat number 8. We have an unbelievably epic podcast. We're coming at you guys from Wisconsin, basically middle of nowhere. I have two awesome guests. First time we've ever done 3 people on the HyperChat, so this should be really exciting. Maddie Mogul, who was the first ever guest on the HyperChat, founder of Toom Dips, also amazing Tesla bull analyst. And then, of course, we got Rob from Tesla Daily, who's been on Hyperchange before. Amazing Tesla podcast. If you guys don't know about it already, you're sleeping, and you should definitely be following it if you're watching Hyperchange. So anyway, stoked to have you guys on to talk about Tesla. These are the 2 people that when something goes down about Tesla and I want to scheme with someone immediately, they're the first 2 people I call. And so this is why I'm really excited to basically have one of those type of conversations, but on the podcast. Thank you guys for coming on, by the way, taking the time.
Yeah, thanks for coming all the way out.
Dude, no problem. A little closer for Rob.
6 hours still.
Yeah, 6-hour drive for him.
But yeah, I thought we could start with, the Q2 numbers. I guess those are hot off the press. I haven't put out much content about it, but, my quick take is 95K, better than the 90K of the leaked emails. They hit their own guidance, which I thought no one thinks they're going to do. I mean, they're exceeding my expectations. This was the first real quarter where we got over that international delivery hump, the tax credit cliff. I felt like really normalized. And so to see it be a record quarter, I think validates a lot of the sort of theories that Tesla is really, creating a huge disruption in the auto market, taking big share. So I was really pumped on that. But on a more granular level, just the fact that I think we could be profitable this quarter with that level of deliveries. Tesla's guided for not a profit. So I'm kind of hoping Elon is like secretly sandbagging there. But I don't know. I'm pumped. So I'm curious what you guys' kind of like quick take is on the Q2 numbers.
Even $1 of profit, I would be cool with, because that gives the odds of S&P 500 induction for Tesla a lot better odds, because what is it? It's the last 4.
Well, I think they need, so it's the last 4 in summation
coders
need to be profitable, and then it's the most recent is supposed to be. Yeah. That's more of a guideline than a requirement. Mm-hmm. But I think they need like 220 or something in the 200 range of profit to be cumulatively over the last 4 quarters profitable.
To offset Q1's.
To offset Q1
debacle.
Yep.
Okay, but 3 and 4. I mean,
3 and 4 were strong within the Q2 last year, and then Q1 was obviously
okay. So we
very
need
negative.
200 mil of profit.
Something in that range. Mm-hmm.
Got it. Yeah, and I mean, if you saw what happened with Twitter after they got inducted into the S&P 500, that was a great short-term catalyst and kind of took off. So I think that could be an underrated short-term catalyst for Tesla.
And, just for the people watching who are maybe a little bit less informed about what that means, it's basically a structural inclusion in this huge group of stocks that a massive amount of institutional capital, mutual funds, index funds all have to start acquiring Tesla. So I'm curious, do you have any back of the napkin numbers on what type of volume or what type of, are we talking a couple $1 billion, a couple percent of the company? Is it 5, 10%?
I've read a little bit about it. I haven't done any firsthand research into it, but from what I've seen, maybe 5 to 10% seems to be kind of like what people would expect, which I know doesn't seem huge, but I think that would probably add a lot of stability to Tesla too, because you then have, essentially like a long-term shareholder in all of those index funds that are coming in and owning Tesla. So I think it would provide a little bit more of a floor and stability to the stock that we definitely haven't really seen as of late. Which would be a big benefit.
Yeah, those institutions that are trying to mimic the S&P 500. Right. So even during bad times, they would still, they buy it initially to reflect that index, and then they don't sell even if things get tough. And that multiplied with how many people are betting against Tesla that are short Tesla, mm-hmm. and that could be like a double. A double boost.
Yeah.
Do you guys have any insight on the short numbers? Because it's been impressive how rapidly I think we're at 45 million record high.
Yeah, I think it's like 42 now. The last report was 45 prior to that, which was both all-time highs. I mean, now we're at the second all-time high, but it's definitely high. I don't know in terms of the percent of float if we're at an all-time high, just because over time, obviously, there's been shares added. Yeah. But it's high regardless.
Isn't it 30% or something?
Something like that, yeah, in the ballpark.
Yeah,
I mean,
crazy high.
It's huge. So I'm not a big short squeeze person. I don't think that's really going to happen. It never really has with Tesla. I mean, there's been, what I'd like to call short covering rallies, back in 2013. I think we saw kind of one of those.
Yeah,
but
I think that was kind of a short squeeze. Or as much as
like a mini short squeeze or whatever.
Yeah. And it's short-term thinking.
Mm-hmm. Right.
You just got to not focus on it.
It'll be nice if something like that happens, because that then would hopefully lower the short interest, but who knows? Maybe then it comes right back after spiking up. So yeah, it's not something I hang my hat on looking forward to or anything like that.
I'm glad you said that. And if value analyst is watching, they need to pay attention that a short squeeze is not really what we want or should care about, because a short squeeze implies like an irrational move away from the fundamentals. And that's why people get so excited. You know, we're in Tesla because we think the fundamentals are justifying that upside. If you're waiting on the short squeeze, you're betting on weird market dynamics. That's what your trade is. Your trade isn't the fundamental company. And so I think Tesla's going to go up, way up, just because the fundamentals are going to prove it, not because we need a short squeeze. You know, that's why I kind of think Elon's bout with the shorts is kind of interesting.
It is. But then over the long term too, like as that short interest declines, like that removes shares from the market, because every time a share is sold short, two people have to buy it. So it essentially like increases the shares out there, which as supply goes up, I mean, the price comes down, just basic economics. So over time, like as Tesla improves and, you know, gets more stability through things like S&P 500 inclusion or consistent cash flow positive or consistently breaking even, hopefully that short interest declines, and that effectively has the impact of removing shares from the market, which again increases the stock price over time. Even if it's not like a squeeze, it's still nice to have that short interest.
And this is where when people are talking like the fundamentals for Tesla, everyone likes using PE, and it's like, okay, you've basically got a lever, and you can either pull it up towards growth or down towards profit. So I mean, we want this company to grow. If it's going to be one of the most valuable companies in the world, we need to grow the top line revenue. It needs to be a massive tech titan. So we don't want them to profit until the business matures, right? So that's where I think when people are talking valuation and fundamentals, PE is the exact wrong way to look at it, and it should be more on a revenue sales multiple in comparison. And they're at what, like just over 1 right now?
Probably like 2-ish right now. Yeah, it dropped down to like 1.4 not that long ago when it was in the 180s.
For 2019.
Trailing 12 months, I'm pretty sure.
Yeah, I'm saying 2019.
Remember, yeah.
So it'll be like just over 1, maybe 1.5 short term, which isn't a bad valuation metric.
No, I mean the S&P 500 trailing 12 months trades at, you know, like 2.5 price of sales.
People
which
would say
automakers
are much lower though.
Right.
The average automakers at
they're like
0.4,
0.5. Yep.
I think that's a combination of them being disrupted and being hybrid financial institutions as well. Like that, I think that's supremely overlooked. Is Ford and GM are essentially like have financing arms in our banks that are actually collateralized by ICE vehicles. You know, they have all these auto loans and leases, and the actual asset backing them is these ICE cars, which my theory is like that's a house of cards. The use value of those, the entire, you know, pricing theory structure of how the trajectory of the value of those cars is going to be screwed. So I think the market's smarter than people think, and that's a reason for the depression of the multiples of legacy automakers.
Yeah. And I think when we look back on this, like 5 or 10 years from now, we're just going to see that top line revenue skyrocketed. And if the stock price doesn't keep up with it, then that sales multiple keeps getting contracted until it's such a good deal that the stock has to catch up.
Exactly.
And we're not that far away from them matching the other automakers, which I think is like 0.5 to 0.6-ish. I mean, that could be like 2 years until we're
probably
there,
and then if we stay at this price, less than that,
and then they're still growing super quickly, so it's only going to contract from there. So that's where I think it's really difficult to talk about Tesla valuation using some metrics like PE when it should be probably more revolving around the sales conversation.
And I feel like there's we're hitting on a bigger issue here, which is like the Amazon thing. I know a lot of people don't like that comparison, but I think it's so, in terms of fiscal engineering strategy, it's really the exact same model, which is if you're putting cash on your balance sheet and accumulating profits, it's because you don't have capital to invest. Interest rates are so low right now that I think there's this like it's almost a sign that you don't have things to grow and invest in. So if you want a company, like you're saying, to capture that opportunity, you want them to maximize all their cash flow, throw it right back in the business. And that's why I kind of wanted to press you on, okay, so we see the price sales thing, but we have to be looking at profitability on some level. So the way I do that is like operating cash flow, you know, so we can see what the business is actually doing. And there, Tesla's been really, really strong, and especially on a trailing 12-month basis. I'll put up the chart right now so people can see. But if you kind of average out the lumpiness of the quarters, one thing that I think is totally being overlooked in the Tesla story is the cash flow profiles improving. You know, they're getting to the point where they can actually fund their business themselves, get the flywheel going, you know, increase that revenue, drive that growth without raising outside outside capital. And they went like a year and a half without raising any outside capital or something like that before they just did the raise, which was like the longest in Tesla history. And so I think that's kind of the piece of the story why I've been getting more excited in purchasing shares, is because I feel like there's this huge disconnect in that the growth has always been there, and now the cash flow story is finally catching up.
Yeah, and that's where technically the value of any company is all the future cash flows discounted back to today, right? And so that top line revenue is going to be in the future, which should hopefully be big, will be multiplied by the gross margin, which is also better than other automakers on average, or at least will be when they're at scale. So you multiply that top line revenue by that better gross margin, and cash flow is going to be great.
And so
that doesn't even factor in the robo-taxi network.
Totally. And so give us some back of the napkin numbers there in terms of like, you're thinking 100 billion in revenue from the BEV business. Why is Rob smiling?
I'm just waiting to see what Matty Mogu comes up with all these numbers.
Yeah, you're always pressing me. It's like pretty difficult. I mean, Elon said basically 50% growth every year for the next decade. And that was what, like 2 or 3 years ago.
Yeah.
So
I mean, I think the best way to look at it is kind of look back from Elon Musk's compensation plan that was approved by the board 2 years ago or whatever. And I think the low end of that is they need to be $100 billion market cap. And there's, I can't remember the other two metrics that he needs to hit, but at the top end, the compensation plan maxes out at 650 billion market cap. So if we're talking price of sales, like you're looking at maybe a 400 million or $400 billion revenue company if we're, pretty compressed there.
And I think that matches up with the 50% growth rate over that time.
Yeah. So we'd have to, work through the math on that. But I think long term, like that's kind of what they aspire to is like, $500 billion in revenue is
so over 10xing from the revenue now, basically.
Yeah. And I mean, like the price of sales should go up if Tesla can show that they have that pricing power to get margins higher than the rest of the automakers, obviously. And they've got a lot of ability to do that with, obviously, their software competency being much higher than any of the legacy automakers.
Yeah. And then you throw in the potential of the robo-taxi network and just how big of a game changer that business model is, and the margins. And
yeah, that just breaks everything. Like,
yeah,
I feel like you gotta. I mean, ARC does this. Like, they have their model kind of without that, and then they have their model like with it, and it's like the model with it, bull case, $4,000. So
yeah, the only way that it doesn't work out well for Tesla is if they have the without angle and somebody else has the with.
Gets the with,
right?
Yeah.
That's the worst case scenario. Is somebody else figuring out level 5 ride sharing network, and Tesla is just still building electric vehicles without that.
Yeah. I mean, there's so many advantages that, first of all, I think the skateboard technology there, as a fallback, could they have value if they need to be buying a ton of skateboards, the best battery cells, and they have huge production? That's almost seems like a nice fallback. And then the fleet advantage is something I keep coming back to. Like, that just seems, whether you like Tesla's approach or not, this concept of data is the answer. I think paying engineers to drive around is just so backwards. You got to get the cars in the customer's hands and let them do the driving for you and training the neural net. And I just think, there's no example of that at all.
Right.
And actually, one thing I wanted to kind of build on with this is that the recent price increases of fully self-driving, like you were saying, the software competency hitting the gross margin structure, I think this is a very underlooked part of the thesis, that we don't even have to wait for the full robo-taxi thesis to unfold to start, sort of accruing like financial success from it in terms of they can sell the fully self-driving package. These features have higher gross margin. So do you think about that?
Yeah, 100%. I mean, like you don't, like you're saying, you don't need to be level 5 to start adding value to the customer, which in turn adds value to the company. And we've already seen that from Tesla for the last, 4 or 5 years that autopilot has existed. That's been the leading driving assisting software hardware combination on the market in that time, with maybe some exceptions in some small areas with like Cadillac Super Cruise or whatever. But for the most part, Tesla's providing the best value there for the customer, and really the only option in terms of driving assist that adds, more than like lane keeping.
Major safety, and it's just really cool. And it's all gross margin as well.
And it adds to Tesla's brand, obviously, in terms of just being, the technology leader and
frontier kind of pioneer.
Yep.
Like, you have a Model 3 and you paid for the FSD, right?
Yes. Yep.
So can you walk us through, like, why did you do that, or as a consumer? Just as a Tesla fan yourself, why did you think it was worth it?
Well, at the time it was like $5,000 for enhanced autopilot, for sure doing that. And then at the time it was, if you pay $3,000 more up front, it's going to be $5,000 if you activate later. And I'm not going to miss out on any, like, full self-driving, feature complete kind of advances. I want to own the product and know exactly what it is capable of and how quickly it gets better, which, I mean, I've had it for almost exactly 1 year now, and it's just really, really cool to see how far my car has come in that time. So yeah, I just wanted to, you can also roll it into your loan as well. So instead of, it's not an extra $3,000 out of pocket, it's $3,000 more into your loan that you're paying over time. So I just thought it was the right financial move for me.
And when you say it's getting better over time, I'm curious if you could give like a couple nuggets of, like, what does that mean?
Yeah, so I think the two biggest ones would be summon and navigate on autopilot. And then past that, it's just like the way that enhanced autopilot works, it just gets smoother. And then all of a sudden you've also got automated lane changes, and it's just getting better and better. And then all of a sudden it's exiting for you. Now recently they just started recognizing stoplights. It'll blow right through right now, but at least now it recognizes them, and if you're going to, it gives you an audible sound. These are all things that didn't happen when I first got my car, and we have like a clear line of sight to what we experienced at Tesla Autonomy Day with the full self-driving demo, where not only does it recognize the stoplights and stop signs, but it's actually stopping for those events.
It's really fascinating. I think part of the reason the market doesn't get it, even I struggle with this, is because it's such a different way society will work when you don't need to have a driver in the car. Like, it's just one of the biggest technological shifts of society. And so it's just really hard to wrap your brain, or I think, around how big that business could be, how exciting it could be. Like, we're trying to, everyone's getting excited about the modeling and the financial part. I think like the psychology part and the real human part is what we should be talking about more. Like, you have to get in a car that with no one else in it and trust it to drive you. That's the part I freak out about all the time, is I'm driving Matt's Tesla and it's like on autopilot, and I'm like, I don't like this. I just want to drive, like
you got to get used to it.
It starts beeping here and there. Like, there's definitely a learning curve, but I think, that's just kind of the part I find really interesting, is, the consumer adoption piece, I think, is going to be really where the rubber meets the road.
And the no person in the car thing, like the full kind of hardware stack that's capable of full self-driving, what is it, October 2016? Is that what they said? Every car built after that?
Yeah.
When they started doing autopilot too?
Yeah. So, but the other thing, and I was listening to your podcast with Sam Corus from ARK Invest, and that's where I completely forgot that the current SNXs don't have the interior cabin cam. And that is an underrated, it's like a small but key piece of the puzzle. And I think that's another kind of hint that there is a refresh coming, because that's actually pretty crucial. What are they going to do, retrofit?
I mean, I feel like the theory there would be like the Model 3 is kind of like the fleet, like self-driving fleet vehicle, because it's more designed for that, and obviously it's a cheaper car to build than, like a Model S or Model X, where those are more like you're buying them for some of the performance. Model X a little bit different because it's got more capacity, obviously. But
God, the X would be such a great ride-sharing car,
X would
though.
be, but like,
it would be
perfect.
perfect.
Once the Model Y is out, that becomes less of a factor versus...
well, more people, more space. Depends what you need.
For sure.
And let's talk about the S and X refresh while we're on it, because it's just been like... It's killing me, because I think like it's coming. They do Project Raven. It's like, this isn't really it, but I get so excited because I feel like this is the cash flow cow of the company, and the brand. Like you said, the interior camera doesn't look as good. The touchscreen doesn't seem as good of the premium vehicles. So as a product nerd, I don't like that the top end vehicles are kind of not quite as good in some ways as the Model 3. And then I think we're seeing that play out in the numbers for the first time ever. Now that Model 3's there, it's I mean, this is what Apple did. They're cannibalizing their own products with something that's cheaper and better. So that's all amazing. But I think the refresh, to me, and maybe this is why they guided in the deliveries for increasing demand, and everyone's kind of like, where is this going to come from? The new tax credit cliff, all the initial buyers dried up. I think they're gonna, if they come out this S and X refresh, every Tesla nerd, like, I think that's what people are underestimating. Like, these like really people who own like 5 Teslas and just always want the newest one, I think there's a ton of those ready to plop down for the new S and X. Maybe if they're smart, they improve the gross margin profile of those cars. So I think financially, that is one of the most exciting things kind of on the radar for them.
Yeah, I mean, I agree. Like that's, I think, one of the biggest problems that has happened over the last couple of quarters has been Model S and Model X being, down significantly year over year, 50% or whatever it is. And like you said, those kind of at this point in the stage of the company have been the cash cows. And that's really impacted the financials and definitely hurt Q1. So I think we have some reprieve from that a little bit with the Raven powertrain and suspension updates, but I think there's still probably a huge number of people that are convinced there's going to be a refresh and are kind of just going to hold out until Tesla does something there, either with the exterior or the interior or whatever else it may be.
Yeah, hopefully both. But just imagine how killer those S and X vehicles are going to be. Yeah, if you get the exterior and interior S and X refresh, I mean, just with that Project Raven update, I can't believe they got 35 miles EPA
10%
range.
more efficiency out of just a powertrain update.
Just the refresh of the electric drivetrain. I think that's a big part of Tesla's efficiency advantage over other EV makers is the majority has to be the powertrain, right?
Yeah, I mean, that's something we've talked about a lot. I think you guys talked about it too, just the core efficiency table that you've worked on and like where Tesla's getting that advantage from, because they are so much more efficient for their weight in terms of the range they're getting out of the vehicles. And, that comes down to a lot of things. But I think the biggest factor is probably Tesla's powertrain efficiency through both the motors and through their batteries. And hopefully we're going to learn a lot more about that, in Q3 or Q4 with the Powertrain and Battery Investor Day, which is super exciting.
And yeah, I think your efficiency table is probably one of the best nuggets of Tesla DD out there, just in terms of summing it up, the thesis. And it even it went over my head. I felt like it tied together so many thoughts and ideas I had, but no short has ever come close to debunking that. You can't there's no. So I'm just curious, kind of breaking down. I want to dive deeper into that efficiency chart, what it is, why it's so important. Do you guys have any thoughts on that?
Yeah. So the core efficiency formula that I made, basically you've got how many kilowatt hours of battery do you have in the vehicle, how many miles of EPA range does it go, and how heavy is it, how many pounds does it weigh. So it's basically an interaction of that. How many kilowatt hours do you use per 100 miles of EPA range per 1,000 pounds of weight? And the lower the number, the more efficient they are. And it's basically Tesla for all those vehicles at the top with the lowest numbers, the most efficient, and then there's a huge gap in between everyone else.
And why is that important? Maybe Rob.
Because that's really what you want to optimize for when you're building a vehicle. You want to offer the most range for the least weight in the most efficient way possible, because the biggest cost for electric vehicles is the battery. So the more optimal efficiency numbers you can hit, the fewer batteries you need to put to get an acceptable amount of range for the customers, which obviously over time has been a huge issue for electric vehicles in terms of their adoption, is range anxiety. And Tesla's done a phenomenal job of addressing those things, and their powertrain efficiency and things like that have definitely aided them in doing that. And the more that Tesla can drive that core efficiency, the better their margin profile is going to look, the cheaper the costs are going to be for the customers. It's just that's the forcing function of
value proposition,
EV adoption, basically, as that core efficiency, I think.
Yeah, and it's amazing to look at the other automakers, because they can kind of cheat on their stats in terms of charge rate and range, because they're maybe throwing more batteries in there.
Yeah.
And your efficiency chart will cut through that, and you might be like, well, why does that matter if the stats are there? Because it means the gross margin, the costs of that vehicle are out of control.
Yep.
No legacy auto company wants to disclose their gross margin on their EVs, because they're buying everything from LG and they're getting crushed on margin.
Yep.
Yeah.
And you have actually the closest piece of data that proves that, in my opinion, which is the efficiency table. And so not only is Tesla the longest range vehicles, which is amazing technology, but the cheapest cost to produce those battery cells is
and they're getting the most out of every battery cell too. So it's yes, they have access to cheaper batteries, and then they're getting more use out of an individual battery cell than another company is able to do because of their powertrain efficiency, again, like the table kind of demonstrates.
Yeah, I think the easiest way to sum it up is assume that Tesla and another EV maker, assume that they have the exact same vehicle shell, right? Tesla would have to put less batteries in their vehicle shell to go the same distance as the other shell, right? And that means the other EV makers, to match Tesla's range, needs to add more batteries. Those batteries add weight, which means you need more energy in order to propel the vehicle the same distance. And then they also do like the software limitations on their battery packs, and their batteries cost more than it costs Tesla. So that's like a quadruple hit essentially. And eventually that's all going to trickle down to the value proposition. And that's what you see with the Model Y versus like the Jaguar I-Pace. Very similar size vehicles, similar in weight as well, I believe. And one is, the Model Y is going to be like $25,000, maybe $30,000 cheaper for
right around there. Yeah.
And the Model Y is still probably better. And that's why people don't understand that.
And who knows if Jaguar is even making money on the I-Pace? Like,
exactly.
They probably aren't.
It's a money loser,
right.
Probably. And that's where...
Sorry, Jaguar.
No, I'm like, I hope Einhorn's listening. It's like, dude, you really want the Model Y over that I-Pace. Like, come on, bro.
But this is where like everyone keeps saying Tesla killers are coming, competition is coming, like Tesla's going to get wrecked once competition comes and they don't have the entire market to themselves. But the other EVs are not Tesla's competition. They can offer probably a better electric vehicle in comparison for $25,000 or $30,000 less than the other EV makers. Tesla's true competition is not what Elon said, the trickle of EVs coming out from the legacy automakers, but the flood of internal combustion engine vehicles that go out of the plants every day.
Love it. And it's like, think about it. There's 90 million cars sold each year. 2 million are electric. The 88 million is what we got to go after.
Yeah.
You know, that's really the crux of it. And let's jump into Maxwell, because I feel like this is we're hitting on the edge of Tesla's already ahead here, and then it's like, okay, well, everyone else can catch up super quickly. I feel like that's one of the bear theses, or something I would, watch out for. These companies with huge resources, amazing manufacturing, all types of connections, can they get this to where Tesla is? And then you look at the Maxwell acquisition, what's that's implying. I think Tesla's even just pushing the battery powertrain days so hard and kind of like subtly hyping it up is a very clear signal that they have news to drop, or they have a theory, there's something there. And so I think this lead's about to get even bigger. And that's the part what I think really, so how do we get from 2 million to 50 million EVs sold and really take that market share? We need to take the technology one more step, I think. A little bit faster charging, a little bit cheaper, a little bit longer range. And Tesla's actually going to push that envelope with this new acquisition. And so, whether it's 6 months or 2 years until this technology gets integrated, there's already a roadmap for something really, really exciting in the next generation.
Yeah, 100% agree. I mean, from the numbers that Maxwell shared in terms of like what they've been able to demonstrate from, I think it's like in their labs, right? They've been able to achieve like the 300 watt hours per kilogram metric versus, Tesla today anywhere from, depending on the source, like 220 to 260. So that's right off the top,
And what's that metric you're citing again?
So just the gravimetric energy density. So the number of watt hours per kilogram. So it comes back to like Matt's core efficiency of just the amount of energy that per weight that Tesla can fit into a battery cell essentially, or, a combination of battery cells, battery packs. So the higher that number goes, the fewer batteries you need per range, which lowers cost, lowers weight. And as you, again, lower weight, you can put fewer batteries. It's kind of like that self-fulfilling like cycle of like, there's sort of that like compounding effect, which is, we're talking about earlier, kind of the negative impact of that compounding effect is hitting the other manufacturers because they can't be as efficient with the powertrain. And as Tesla continues to improve that efficiency further, it gets the positive benefit of that compounding effect. So I think we're going to start seeing that, hopefully with some of the Maxwell technology. I mean, we've been seeing it obviously over the years, but anytime there's a step change, like Tesla's been very solid in terms of like that progress that they've been making, 5% per year kind of improvements, roughly. If there's a step change to that, like that's awesome. And like you said, that's kind of what you maybe worry about a little bit of like somebody else getting that step change.
Yeah.
If Tesla can do that, that's, one fewer risk, or one less risk than before.
Yeah, so the Maxwell acquisition potential, you've got the 20% cheaper battery cost, and then going from like 300 to 500,000 mile range for the life of the electric vehicle to potentially 1 million for not only the battery pack, but also the drivetrain, right? So imagine that would also blow up the value proposition when you've got a vehicle that can last that long as well and be reliable for that long.
Which you're going to need for a robotaxi fleet for sure.
Exactly. Huge advantage it would be. And then no cobalt, which is a conflict metal that basically all of it gets taken from like the Congo. Yeah. So you can get rid of that. And as EVs and batteries are spiking, the cost of cobalt is increasing. So they're down to like 2% now. Other automakers are around like 7 or 8. And they could potentially take it out completely. So you save a lot of money and you don't have to basically promote that unsustainable conflict supply chain. And then on top of that, the range and core efficiency skyrockets because of that increased energy density, where they're going from roughly 260 watt hours per kilogram now to like 300 is what they said they have proved.
Didn't Elon just confirm that on Twitter?
He just confirmed on Twitter 300, so that's an over 10% step change, right? So higher than that.
I mean, we've talked about that tweet. Like, I'm not sure that that's like Tesla's number today, because I think the wording, you'll have to pull up the tweet so we can.
It's not mass.
I mean, you guys know me. I'm like very specific in terms of like the phrasing and stuff.
He's
pumping the brakes,
which matter. The details matter, honestly.
I'm not saying that they're not. I'm just saying like from the wording that he used in that tweet, I'm not sure if that's just like, hey, batteries are available today that are capable of achieving 300 watt hours per kilogram, and maybe those batteries are like more expensive or something, but it's still achievable.
Small scale, probably super expensive,
or maybe he's saying like Tesla's got that technology available to themselves today. Like that would be a step up from where the Model 3 is at. So that seems like a little bit of a big thing to just divulge in a random tweet, but the
POC of Maxwell was 300. It's the same number. So that I think is the clue.
Matches up. So that's where it's probably, he's talking about Maxwell Tech, and you've got battery and powertrain day coming up. So like it's likely that that's what he's referring to. And that's where the 260 up to 300 currently, at least proven on a small scale, and then potential up to 500. And then another thing he just brought up was the electric jet.
VTOL.
Exactly.
Matt's a big fan of that.
Matt is obsessed.
Matty Mogo wants his electric jet.
I do. That is one of my life goals for sure. But that's where you just got to hit the 400. So if they're at 300 proven now, and with a clear path to 500, and you just need 400 to hit. And when I was on your podcast, we were saying conservative estimates, just 5% increase in energy density for lithium-ion batteries. Even with a conservative estimate and no breakthroughs, we said like 9 years, right? So like 2028 or something. And now he just also tweeted 5 years. So you get that Maxwell bump, and then maybe some other breakthroughs along the way to hit that 400 kilowatt hour or 400 watt hours per kilogram mark. And that's where I think in the next couple years, people are going to start realizing that like they should start pricing in Tesla as an electric jet maker.
But to me, it's even bigger than that, which is it goes back to even broader, which is that the cheaper the batteries get, the cost of all this electric technology, ways to produce, consume, store power, all get cheaper. So it's like the lower these costs go, the more industries they disrupt at a time. So the VTOL jet, Matty Mogul wants to buy it, and that's exciting. But think about the semi truck. Think about the Model 2, the $25,000 car that's a little smaller market. Every single step, every single 5% improvement, and it's sort of like I'm not doing a good job at describing it, but you know what I mean. Every percent
it opens up a new business area.
It opens up a new business area. And
I mean, same thing with like I think a great way to look at that is like utility scale energy, like with the power packs. Like the lower the cost of the power pack goes, the more that's going to make sense to replace current power options. Same with solar. Like the lower those costs go, the more it can disrupt, and that's like the path that Tesla's driving towards.
And a big thing for the electric jet, not just like billionaires having like a cooler, faster plane that can land anywhere, but also the emissions. So if you're talking about achieving Tesla's mission of transitioning to sustainable energy, that's huge. And that also links to like why the semi-truck is super important. I'm not going to buy one. I'm less excited about that, but I want to see them on the road, because when we were at Investor Autonomy Day, one of the Tesla semi workers at Tesla said that even though semi-trucks are only like 4% of the vehicles on the road, they cause like 30% of emissions. And it's like, whoa, okay.
Yeah.
If you take, I mean, I'm not going to get one, but that seems like a great way to achieve Tesla's mission.
Totally. And I think the constraint why we haven't heard much of the semi-truck goes back to this Maxwell thing and solving battery cell production at scale. I think one of the biggest decisions in Tesla's boardroom going on is we have a certain amount of really good cells. What's the best way to use them? That's why they dropped the long-range Model 3 without all-wheel drive, because it wasn't an efficient gross margin use of battery cells. So I think there's so many projects that get unlocked when the scale cell production gets figured out, which is just one, because I feel like the semi has kind of been on the back burner. I think it's been on the back burner for that exact reason.
I think that's kind of interesting to think about too, in terms of like how Tesla can best deploy batteries to lower emissions in general, because that's like really, if you go back to Tesla's mission, like that's what they should be doing, which kind of comes back to right now vehicle mix, and whether that's incentivizing Tesla to produce more standard range Model 3s, SR Pluses than long range, because the more you mix towards the standard range, the more customers are going to be able to get a vehicle if you have a fixed battery supply, because you just need fewer batteries per vehicle. So it'll be interesting to see, like, as Tesla's vehicle market or customer choices continue to expand, where Tesla chooses to deploy those batteries. Like, does it make more sense to produce one semi, or does it make more sense to produce like 10 Model 3s, whatever that ratio is, in terms of cutting emissions? It's just going to be interesting to follow, because I think Tesla's probably going to be pretty perpetually battery constrained.
Well,
over
hopefully
time.
that's not as big of an issue as we think it could be, and kind of
The battery.
I mean,
will
that's
solve
kind of
that,
what you
hopefully.
like. That's
Yeah,
kind of what you
exactly.
want to be constrained by, though, because if you're constrained by something else, like that.
just not too much.
Yeah.
Right.
Yeah.
Well,
I mean, you don't want to be constrained by anything.
Yeah.
But like, I don't know.
This goes back to Tesla's biggest problem, which is they can't build their products fast enough,
Yeah.
as fast as people want to pay for them.
Right.
If that is your biggest problem and constraints on your business, that is the best problem you want to have. That's what I always, and you actually made me think of something really interesting, which I tweeted in reply to that whole Ninja Elon thing, which is, okay, so commercial planes. I take planes all the time, everywhere for business. And I feel guilty, and I'm like, I don't see the push for electric. I mean, I guess there's a couple startups like Right Electric, but it feels like Tesla, if you have that battery edge, this is your game to play. And so why have we not heard, is the VTOL jet, is that for billionaires in their private homes? But let's talk about the commercial flights that is becoming a growing piece of the economy in every single country around the world. They're just buying more and more planes. And so if that is what I really would want to ask Elon Musk about, is what is your plan? Is Tesla going to tackle that piece of the equation, or, do you guys have any theories on that?
Yeah, I mean, I think what you're saying is kind of like the thought generated from, like, does it make more sense to, again, put like batteries towards, assuming, it makes sense from a physics perspective, does it make more sense to like deploy the batteries to like commercial flight, or does it make more sense to put batteries in like a semi? Like, where?
But not even the timing. Just why won't Elon admit that regardless of timing, commercial airplanes is a business Tesla will go in? That's what confuses me.
It's just early, and he's already getting enough flack for talking about like even Tesla
stuff.
insurance, which is probably likely to launch within a year, even though it was already supposed to be launched already.
Yeah, they just said they needed to like complete a small acquisition first.
Yeah, but it's just like that kind
means.
of stuff where everyone thinks that he's just deflecting, when really it's just a really smart strategy that's going to create even more advantages with vertical integration.
Yeah, and I think we got to like go back to the master plan too, and like that's what Tesla's focus is right now, is completing the master plan, and that's kind of the path that Elon put forward for the company for the next decade, whenever that came out 2 or 3 years ago. And they're going to stick to that plan, largely, and it's a great plan. And once that plan is achieved, then we can start to focus on some of these other opportunities, like commercial flight or whatever else the case may be. Like maybe that's master plan part 3.
Yeah, focus is super
Master plan part 3.
Focus is super important.
We're going to get there at some point, right?
Yeah.
So Matt, you were talking about you mentioned the Tesla insurance. Why is that's a software eating the world problem, and Tesla's cars are generating more data, being connected and being software first. That is, insurance is a data business. So I hope Buffett is listening for Geico. The amount of data that Tesla is able to pull per vehicle is orders of magnitudes more about the driving habits of that person, and therefore their ability to make an educated estimate for the price of insurance is orders of magnitude higher.
Yeah.
And so I think this is a huge opportunity to reinvent a mega business that Tesla's getting into.
I think it's 3 pieces. One, it's the convenience factor. I know me trying to get insurance on my Model 3, you have to go out, you have to get like all these quotes and solicit loans, all that kind of stuff. So it's just like a one-stop shop, and Tesla making it easy to complete the purchase, like to be able to just buy the vehicle and insurance and get financing all through like just the mobile website with like a few clicks. That sounds pretty sweet. And then obviously they're arbitraging the true cost of Tesla insurance versus what these third-party insurers are charging. So they're charging too much. The true cost is here, so Tesla is going to arbitrage that with their own. And then I think kind of the last piece of the puzzle is just in some markets. So it's kind of fine here in the United States, but there's some countries where the cost to insure a Model S is like crazy through the roof expensive. So that's another way that I think that that's kind of what they're trying to attack first, is just improving the value proposition of purchasing their vehicle, because the insurance cost isn't astronomically high versus the cost here in the United States.
100% agree with all of that. I think Tesla's also looking a couple steps ahead to when they eventually have or start rolling out some of the Tesla network. And Tesla's going to be the only company that's really got the data that's equipped to ensure that. And I think they are anticipating having some challenges there that they're going to try to solve now, and try to get the infrastructure in place with the insurance business so that they can have that insurance when they're ready to kind of like flip the switch and, you know, and start the Tesla network.
Yeah, and that's where you might need to like customize these insurance plans for full self-driving. And maybe Tesla needs to lead the charge there, because they don't know what other people are going to do, so they just kind of have to do it themselves.
Exactly.
And it was interesting at Autonomy Day where Elon said, somebody asked him who's going to take liability in the event of like a crash or injury, death, something like that, with a full self-driving vehicle, no human involved. And he said probably them. And so that's another reason why Tesla bringing insurance in-house makes a lot of sense. Right. And this is where, like, if you just rattle, those 5 things we just said, it makes a ton of sense, yet everyone is giving Elon flack for saying that, oh, this is just distraction from their core business.
Yeah, I mean,
it's like what?
This
like,
is what
it just
Tesla's,
makes sense.
Exactly.
They're doing what makes sense.
And this is what Tesla's always done. Like, they anticipate the challenges that they're going to have because of the disruption that they're causing, and then they try to solve for them. It's the same thing of why Tesla, they talked about at the shareholders meeting, why they built the Gigafactory. They're like, okay, we're going to need a lot of batteries, and they just aren't going to exist, so we're just going to have to do it. They're going to need to self-insure, or they're going to need to insure like their robotaxi fleet. Obviously, there's not an insurer that's equipped really to do that, or if they are, it's going to be really expensive for Tesla to do that. So Tesla needs to solve that problem, and I think this is like the steps that they're putting in place to do that.
Yeah, and it's not like insurance companies are fast-moving.
Yeah.
Like,
slightly risk-averse.
Neither are automakers.
Exactly. So the combination of the two, that's where it just makes sense for Tesla to tackle this problem that isn't here yet, but it's going to be, and you need to prepare for that.
Yeah, it's crazy how when you dive into each facet of the business, the more bullish and convinced you get. That's kind of the funny thing I've said. I was talking to someone about this, and they were like, why is everyone so obsessed with Tesla and get more obsessed? And I was like, because once you start learning about it and you start getting it, and the deeper you dig, the more you realize how far, like, they're literally doing a game plan that is 10 steps ahead, and every single automaker is still trying to copy step 1. Like, it's crazy.
Literally, yeah, like step 1.
Step
like
1.
The Roadster. Like, there's still not... Elon says like the Model S, but there's still not even like a vehicle that's necessarily like the Roadster was, It's just crazy.
Yeah, and that's another place where Tesla has so many awesome business potential, yet the valuation you're at, Cruise is at 20 billion based on their last round. And how
70, yeah, something like that.
Yeah, so basically at the time, I don't know what it is now, but basically Cruise was valued at half of what Tesla is. Yet they don't have EV programs at scale. They don't have the energy storage business. They don't have the battery gigafactory. They don't have the supercharger network. They don't have the full self-driving hardware and software stack that Tesla's been developing for years now. They don't have the billions of real-world miles on autopilot and just driving in like shadow mode. And then they don't have what I consider to be the best product roadmap in the world of any company by far. Yet you're worth half of Tesla. It's just, I think we're going to look back on this and I hope we do someday. And just be like, okay, that was crazy. That was absolutely crazy.
I mean, the amount of eggs and the amount of, like, I call it the honeymoon period, where these companies unveil a plan, unveil a car, raising hundreds of millions at $1 billion valuation. It's like Tesla's done all the hard work that they're going to have to do.
They haven't talked about it. They've just done it.
They've just done it, and it's really hard. And that's why it's so easy to pick out one little piece of the business that is messing up, or that you hate, or in a one-way Tesla's screwing up. I think that's part of the narrative why the media gets so confused, because it's really easy to just pick on one little thing, but not really take a step back and look at the full picture. So I'm personally hoping the pendulum will swing, because I feel like right now it's so negative, it's so much hate, and it's such a disconnect from what's happening at Tesla and the technology they're building. But I think at some point that pendulum swings. These controversial companies that are disrupting like such crazy times, I think it's it's almost a rite of passage for that type of disruption to get so much hate and attention in the media, because it's a validation of your disruption. I've almost started to love Tesla Q, because the fact that I have tens and tens of people, replying to every single tweet, just hating on me. I don't follow any of them. I don't tweet back at any of them. And they're just taking their time to hate on me, whether they're bots or not, is a disruption that my content's good, that I'm kind of right, and that they're rattled and they're worried, and that they're giving free attention. So it's like, to me, it's almost a validation that Tesla's doing something right, that they're getting so much hate.
The amount of accounts that are strictly created just to comment on Tesla. It's like, wow, that's what you're doing with your time. You just you're creating accounts solely dedicated to like
tweet about Tesla, or like comment on Seeking Alpha.
Yeah,
or
does
like
that happen?
Yahoo,
does that happen with any other company?
I mean, like Apple got a lot of hate too back in the day, and like
so did
Amazon
Amazon.
did. I don't think it's this level.
Not
but
even close.
No, but if you read the articles about Amazon, they will say like they're on the cusp of bankruptcy, like they're not making up money.
Right.
Like it is pretty aggressive.
There are similar narratives have existed for like all three of those companies. Tesla is to an extreme, 100% agree with that, but Tesla's also disrupting
times 10,
disrupting more political industries, I guess. Not even political, but just like well established and
literally
entrenched
in revenue.
Very very entrenched, and very very powerful too. Like I think the spaces that Amazon and Apple were disrupting were a little bit less consolidated in like where the power was truly at, as well as just like less power in general than the companies and the industries that Tesla's disrupting.
And what I think is even more ridiculous is like all these big hedge fund guys, John Hempton, Josh Wolf, Jim Chanos, they're all on Twitter replying to my tweets, following my stuff, calling me out, like calling me names. And then I ask them to
you're a pretty big
check
deal.
this out. And it's just like, come on my podcast. Let's talk about it. Like I'm here. Like any of you guys can come on my podcast. Like
same. I've
up?
invited Bears
on
the podcast.
But are you really like a multi-million-dollar hedge fund manager who's just going to sit behind your computer and fire off an angry tweet?
Yeah, like let's literally talk about it. That's what frustrates me so much with Tesla Q is like they just like spew all this stuff out there, and they're like, that's fine. Like if you think that, like let's talk about it. None of us are like so biased that we don't just want to get to the bottom of it. Like
anonymous keyboard warriors.
Yeah, like I've had plenty of times where I've said negative things about Tesla, like many times. Like I'm fine to just like get the facts out there. But
you are a Tesla bear.
I am basically a Tesla bear. These guys give me a lot lot of crap for being negative sometimes, but and then they're like dude, like long term.
No,
and I'm like, I get it.
Check.
He's a good check.
Yeah.
Checks and balances.
I just like to see both. Like, I just try to like get both sides of it. And like
good.
I definitely know where I fall after that, but it's fine to acknowledge the negatives too, as long as it's not
totally.
Well, and if you've got so many of your eggs in one basket, you got to watch that basket.
Yeah, you got to question
closely.
it, exactly.
So
which I have a lot of eggs in the basket.
Yeah, I think we all do. I mean, needless to say, we're all biased. We're all Tesla investors.
For sure.
But we're watching that basket so closely because you want to be on the cutting edge of
hours a day.
Wrong. Well, I think it's so interesting because I actually kind of chose to do hyperchange strategically, and maybe this is part of what you did, because I almost feel like planting my flag when no one is, when there's so much controversy, when no one believes it, and being that and like putting it out there is actually what's going to get me the cred. Like I didn't fall into this by accident. Tesla, like this is all on purpose because I think it's going to be so controversial and it's going to be so right that when it's so right and it was so hard, like it just makes it that much sweeter. Like the harder they come, the harder they fall. Jimmy Cliff. And I just think that's exactly what's going on right now. And it's so funny because I've never really felt like this weird kind of inner thing of like, it's never been more locked down for Tesla. They closed the Maxwell deal. The cash flow profile is improving. The Model 3 is here. I mean, this was like Gen
and the Model 3 is awesome.
Project Blue Star.
It's awesome.
It was literally called
good.
Project
It's awesome.
Blue Star when we started following it. Like it didn't exist. And now it's like we ride Matty Mogul's Model 3 and it's amazing.
Yeah.
And it's like, it's just incredible. So,
and that's where, like, anytime things get really bad and really negative, I just keep going back to how incredible the product is. Mm-hmm. The Model 3 is amazing, and that's why it's the best-selling car by revenue. So I think just that, and then maybe more short-term S&P 500 induction, and then you've got the China Gigafactory going up.
We should talk about that.
S&X interior, maybe exterior as well, refresh. Maxwell, full self-driving, feature complete, hopefully within the next, year or two. I mean, we got a demo. We don't know how game that was, but it was pretty impressive. And it's not like they were attaching other sensors to it. So I don't know. I just think there's a ton of catalysts coming up. But what's most important long-term when we look back is that just the revenue growth. And that's what's going to keep compressing the multiple. And then eventually the stock price is going to catch up.
Mm-hmm. Agree.
Yeah, let's talk about China, because you were a big Apple investor. I don't know if we talked about this in the last podcast, but like years and years ago, iPhone early days. You were as well, right, Rob? So
did you beat me or did I beat you in terms of first purchase?
Like, yeah, when
I was 2006, $67 before the split.
Okay, I was 2006 too, but I can't remember the pre-split
around
price.
the same time.
Probably
same person.
Same.
Yeah, and so no, that's awesome.
Sorry, we had to bro out for a second.
I respect the bro out. I got some FOMO. Julian, who's actually in the other room, taught Apple stock in 3rd grade. Like,
yeah, dude, what a baller.
He's a baller, and he loves Steve Jobs. So I've always been surrounded by the Apple heads, and I think there's so many parallels in terms of the brand, the cult. In a good way, the cult. People are so obsessed about the product because they're so amazing and so different. I think there's a lot of parallels there. But even back to the China thing, one of the big catalysts for you and for Apple to really break out was China. Hitting it as that luxury brand in China and exploding there with the middle class and really like finding their stride. And I think we're on the cusp of that happening with Tesla. They're already crushing it in China with so many headwinds. The import tariffs, the cash flow profile of how to get cars there, the shipping costs.
No access to the incentives that other EVs are getting.
Exactly. Yep. Every other EVs has incentives. Is it a coincidence that those incentives are dying down right as the first officially or foreign-owned
It's happened elsewhere. Like we saw that in Canada, for sure.
I think this is when the Chinese government wants something to work, it works. Right. It happens.
Yep.
This is not a joke. And when you see banks like the Pudong Bank giving really low interest rates to finance it, and they're giving finance the vehicle purchase and finance the actual factory building, this is a clear indication they want this to work and be a huge success. And I think people don't realize that's on the cusp of being the world's largest economy that's incredibly powerful, is pushing for Tesla. No other automaker has this.
And Tesla is just such a desirable product and brand. And what's going to happen, I think, and just following the Apple story so closely for years, it was the iPhone 4, and all of a sudden you've got that great product, the brand desirability, status symbol, and then you've got that growing Chinese middle class, and then all of a sudden they sign like China Unicom, China Telecom, then the big China Mobile, and as soon as they did that, Apple stock just went on a tear with that iPhone 4. So I'm thinking that a similar thing happens just with the China boon for Tesla.
Yeah, and I got one really interesting tidbit, which is that the labor hours all-in cost of a worker in Fremont is about $50 to $60, like hourly wage with insurance, health, or whatever, I guess. In China, the data that I'm looking at, people I'm talking to say it could be between 5 to 6. And I think they're going to they learned their lesson about automation, and you have the much cheaper labor, and you have the pace of innovation with the tent. This is the next generation production line as well. And I know they're saying the made in China Model 3 is still going to cost the same base price, including the VAT of the one here. And if they keep that and the demand is there, then the margins are much higher than the U.S. business. Or they can drop the price, and we're going to see a massive acceleration in demand. And you combine
addressable market will multiply.
Yeah.
Which I think that's more my expectation, and that more fits with like what Tesla's done over time. They continue to try to just drive costs as low as they possibly can for the final customer. I'm hoping that they're just kind of starting a little bit higher because the Model 3 came in a little bit higher with.
We know this is what they're doing. That's the playbook they followed. They optimize for cash and revenue. I mean, if people are willing to buy at a higher price, they will offer it when there's lower volume, get that optimized cash and revenue, and then bring down the price, increase the addressable market as their volume increases.
Because at first, like definitely the Giga 3 is going to be low production. Hopefully it ramps up super quickly. But like those first Model 3s off the line, those are going to be very expensive for Tesla to make in terms of like just the amortization of depreciation and stuff like that. So once Tesla's got it ramped up to 3,000 and 5,000 units per week, hopefully they can bring that cost down, or that final price down, pretty significantly.
And that, I think what they're doing is the margin of the Osborne effect is what they want to limit it. So they didn't want to drop the price too much and say in 6 months you could buy it for way cheaper, but you can buy it for a little cheaper. So they're managing that rate of Osborne effect really. That's such a careful dance, and people don't. I think that's something that they don't appreciate with Tesla, and why it's so lumpy is because it's such a big purchase. People are looking so into it. There's so many dynamic, and Tesla comes out with so many new products so quickly that the Osborne effect is something they're constantly having to delicately balance, and it's really, really tricky. But they've done an incredible job.
Yeah,
and the cutting prices thesis of the bears as well. What we saw is that the $7,500 tax credit, when that got halved, Tesla did lower the prices.
$2,000 basically.
Yeah. And what happened is, even though they cut the price, they maintained that 20% Model 3 margin. So that just shows like their cost efficiency as they increase the volume as well. Like, how do you can't rag on them for cutting prices when their entire mission is to make EVs go mainstream and they're keeping their margin at the same rate.
Yeah, I mean, that's like a fine balance, I think, because
Yeah.
you could also argue that if Tesla was able to sell it for a higher price, that would then allow them to have more cash to grow the business, which would then allow them to accelerate the advent of sustainable energy more quickly.
But it's
so
the
it's a tricky balance, but
against other automakers.
It's still a positive that Tesla's able to do that, which is your point. Yeah,
20% gross margin is good. So if you're still maintaining that, then that's a fine thing, and all you are is lowering the price, increasing the addressable market, which is eventually going to lead to not only more volume and more top-line revenue and eventually more cash flow, but it also achieves the mission of transitioning to sustainable energy.
Yeah, and it's not about the 2 million EVs boosting margin. I think it's about cutting into that 88 million of other vehicles. And that my take on this is, it's so funny when people hate on them for cutting the price. And I'm like, so Tesla's product stayed the same. They cut the price by however many grand. They just got that much more competitive. Every other automaker just got that much more rattled. They didn't cut their prices.
Right.
They're not cutting their prices. Tesla, every single time, every day with the software improving, every time they cut the prices, the value proposition of Tesla's products, the rate of improvement of that value proposition is blowing away everyone else in the industry. And that is what you have to look at, is the pace of innovation. But like on that customer level, it is incredible.
The entire point is for electric vehicles to achieve cost parity with internal combustion engine vehicles. In order to do that, you need to lower the prices to the comparable ICE vehicles. That's the whole point. So, yeah, I mean, as long as they keep their margins, I don't know. Do you guys think that with another tax credit having from the $3,750 to
$1,875?
Yeah.
If they'll drop price again?
What do you think? Like $1,000 maybe?
That's what I thought originally, because when they had done that back at the beginning of Q1, it happened in like January 2nd. It was like right away, right after the tax credit went away. And now we're, 7 days into July, and it hasn't happened yet. So I think a couple things have changed, though, because like in Q1, Tesla also released, the standard range earlier than we thought they would. Because at that point, it was kind of like, okay, probably like 3 to 6 months. And then it just kind of happened that one day.
And then
had
leasing.
Like that call.
So that's kind of a double boost to addressable market.
So I think they pulled a lot of those levers in Q1 already that I don't know that they're going to do something again in Q2. And Q3, and we haven't really seen it yet. So,
and maybe battery constrained anyways.
Right. I mean, ideally they don't have to drop prices. Like if there's enough demand, like you should capture that margin. It's a mistake not to.
Yeah.
So, while they're production constrained.
Yeah.
So I think it's a good sign if we don't see them drop prices, but if they do, I also don't think it's something to be majorly concerned about, because that's a huge, that's a big change. $2,000 basically, price increase in the US essentially.
Yeah, I'm really curious what happens with leasing. Like, what is that mix shift? What is the impact on cash?
Yeah, and I think Tesla's leases are interesting. I don't think any of us have dug super deep onto this, but just the fact that you can't even have the buyout option for Tesla kind of disincentivizes the leasing a little bit. And I think
they don't want people to lease the vehicles.
Yeah, and I think in terms of just like the cost structure as well, like, again, I haven't dug super deep onto it, but I think like, the amount that you have to put up as the down payment, and then just the pricing is, you know, decently competitive, but it's not anything like amazing.
No, it's high. It's high.
Right. So I think they're doing a lot of things to disincentivize that. So I don't think it's going to be like super huge into the mix in terms of leasing. But yeah, I mean, we'll have to see when we get the financials, I guess.
So like to wrap it up and kind of close, I want to hit on like some juicy kind of like way this unfolds, because I have a lot of strong opinions. So maybe I'll do like a little riff and then see what you guys think. Because what I think is, you know, what I say, like we're on a slingshot moment for Tesla. Extremely excited about this slew of positive catalysts. I see Q3. I hope it's Q3 SNX refresh. Huge demand boost from that. This is the catalyst that people don't see coming that finally hits, which allows them to hit their guidance, which no one believes in. That is a huge catalyst. Then in Q4, we get the very tail end of the Shanghai Gigafactory coming online. And then I think that sort of brings the revenue to the next level. And then in 2020, one really interesting thing that Julian actually noticed was like a board of directors glance at the Model Y production timeline. So if they're building that at Fremont instead of Giga, I think that's a move to bring it to market quicker. I think we could actually see them under promise and over deliver on Model Y timelines, and that comes sooner into the play in 2020. Then we have the pickup truck, which I think in terms of halo effect of the brand, I mean, there's already data out there that's showing that the Tesla pickup truck is getting more searches than the Ford pickup truck. I mean, this
crazy
is
in like half the country.
This is absurd. I mean, so anyway, I don't know. I threw a lot at you guys right there, but I'm curious, like, what's top of mind? What gets you excited about what's coming down the pipeline?
I mean, for me, the biggest thing is just watching the progress in full self-driving, because I think that's, like we talked about earlier, that's the unlock to just an entirely different company for Tesla. So I think that's the biggest thing. And then Elon, you know, said it himself, the second biggest thing to watch is battery production. So for me, that comes down to how quickly they're able to increase the production at Gigafactory 1, how quickly Gigafactory 3 is able to ramp up, and then kind of what the impact of the Maxwell acquisition is and how quickly that can happen. And hopefully we get some insight into those things at the Battery and Powertrain Investor Day. So super excited about that. Those are the two big things. Like, to me, it doesn't really matter too much where, like, when the Semi comes online, when the pickup comes online, when the Model Y comes online, because hopefully Tesla's able to sell everything that they can produce until those things happen. And again, like, I kind of want them to be battery constrained if they're going to be constrained by something, because I feel like that's probably the most difficult problem to solve. So hopefully they're able to solve those other problems kind of ahead of time, and just the battery production is kind of the limiting thing of the company. And hopefully they can, you know, improve those limits and drive through that constraint like super, super quickly, like they have, you know, over the last 10 years or whatever. So those are kind of the big things for me in terms of like when things actually happen. Like, yeah, I wish, you know, the Semi was kind of like here already. I think that was kind of the original guidance was 2019 or something. And now we don't really, I don't know, 2020 is kind of what it's looking like. So if even that, so yeah, it's all just comes back to the batteries for me, and then autonomy.
And Elon said that at the most recent event. He was just like, the things that people should be focusing on, it's long term, it's battery technology and scale, and it's self-driving.
Yep.
Those two things are clearly the core competencies that are going to create differentiation and value.
Because the future's EV, it's autonomous. So
yeah,
like, that's what we need.
So that's where the Powertrain Battery Investor Day that might be coming up later this summer will be an interesting thing to watch and see what their strategy is, and further vertical integration, maybe even their own mining
battery cells,
something like that. And
classic Tesla just keeps going.
Buy a mining company. I've heard actually some interesting rumors. Someone sent me a really interesting mining project in Nevada that's getting started for lithium. That's like not too far, that we're pitching as Tesla will acquire them. I wish I had. It's Thacker is like maybe the name of the project. THACER or something like that.
Yeah,
it's interesting.
And then the other thing is just full self-driving, feature complete. That, I mean, he said by the end of the year, even if it's by the kind of the end of the year after that, that's still fine, because that would be super cool. Because I mean,
I think it's more about them just kind of maintaining their leadership position.
Yeah, it doesn't. This is another thing that people don't really understand is that what matters isn't how quickly
the date that it happens.
The date that Tesla achieves full self-driving. All that matters is that they get there before anyone else.
Yep.
That is the main thing that matters as an investor long term, because we're going to be in the stock for 10 plus years from here. So hopefully that means it's highly likely that you can achieve at least level 4 autonomy and do the whole ride sharing network. So it doesn't matter if Elon's predictions of, okay, this is going to happen at this time. That is kind of a distraction. What matters is that they have a lead on other automakers and they get there first. And that demo was so cool. I want that pushed to my car. I want that beta software so that I can see how capable it is. So that's what I'm looking forward to most is just like seeing the advancements in my Tesla Model 3 and just see the progress and rate of improvement, because that's the thing that I'm most fascinated by.
And any we're going to say something? I was just going to ask for any crazy predictions from the battery powertrain day. I think they should throw up a better designed version of Matty Mogul's efficiency table and then add in the efficiency of potential of their next generation technology. But I just think they should show your table.
That'd be cool. But yeah, I mean, what Tesla and Elon uses, they use the miles per kilowatt hour. Mm-hmm. And I mean, that's like fine, but that's another thing where if you look at the Hyundai Ioniq, that's also over 4. So I think Tesla puts out we're at 4.5. The Ioniq is kind of close at 4. Mm-hmm. It's okay, that doesn't show the gap that exists between Tesla's kind of core efficiency.
Because it doesn't factor in that the Model 3's got a longer range, which requires more batteries, which adds more weight, which makes the overall profile of the vehicle less efficient, which is why, going back to the core efficiency, why you include weight, all the stuff that we talked about, it doesn't capture that.
Yeah, exactly.
Mm-hmm. And what you said, why is it so important Tesla gets first? Not that it matters when, but that they're first. Because this is potentially it's hard to wrap your head around how big of a monopoly that would be. The cost structure goes down from $2.50 a mile to 25 cents a mile to operate a taxi.
It changes it disrupts the entire business model of transportation. So if it never happens, then that's fine, because Tesla will just continue to sell more electric vehicles and keep displacing ICE vehicles. But if it does happen and it's somebody else and not Tesla, then they could get disrupted. People stop buying as many cars because vehicle utilization rate spikes from 5% to the majority. And that's where you just got to get there first if it happens. But as long as if it doesn't happen or Tesla gets there first, then we are set as investors.
The problem with it, if it doesn't happen, is if Tesla builds their business model around that. Like Elon said, that basically all of their R&D is pretty much going into full self-driving. Mm-hmm. Not that I think this is ever going to happen, but if they set up their business from a cost structure perspective with the assumption that they'll achieve that, and then they don't, that could potentially lead to failure. But hopefully it wouldn't. That would be...
It would just lead to better it would just lead to better
assisted driving.
So either way, I think the R&D ends up being worth it.
I think it's definitely worth it
too. And a proportionally great investment based on, they're definitely going to achieve those features. It's just a matter of time. Whether you can completely take the driver out is not a certainty yet.
Right.
And it's almost like even if you don't know if you can do it, you almost should, because somebody's going to get there, and if it's not you, you're kind of screwed.
Yeah.
And so,
100% agree.
And the other thing I think is even more exciting to me is the way our cities are built. All revolves around the car. You have to have a car. Everyone owns a car. The way our houses are built. This is the way society has been structured for
everyone
decades.
Uses a car.
Yeah, it is. It's your biggest purchase that you probably, one of the things you spend the most money on. This is the way cities and life could change with this technology is the part, I don't know, that's what gets crazy to me, because I think there's so much opportunity. We're just scratching the surface of,
And that's another reason why in vehicles, if somebody wants to buy an electric vehicle, what helps Tesla is that it's such a large purchase that a lot of research is done for that purchase. So test driving, reading, comparing specs, all that stuff. And that helps Tesla a lot because it is so much better based on objective, measurable, hard specs.
Awesome. Excellent way to end the podcast. So that's it for time. Thank you guys so much. I really hope we can do this again. Matty Mogul, co-founder or CEO, founder of Toom Dips, and awesome Tesla analyst. Follow him on Twitter. Rob, if you guys aren't listening to his podcast, again, definitely follow him on Twitter. You guys have any shout outs that you want to give or anything like that?
No. Good.
All right. Well, thank you guys.
Yeah.
Thanks, Callie.
Peace.